Good afternoon, Fort McMurray. It's Melanie Gallia with Remax Fort McMurray, and I am with my lovely co-host,
Bard Pinsent of the Mortgage Center We Connect.
Awesome. Okay, Barb, we get together 8 times a year. So, let's explain to people why that is and what we're up to here.
Okay, so every 6 weeks, the Bank of Canada puts out an announcement, and the one that we talk about is what their overnight lending rate is set at. So it can change up to 8 times per year, and as long as we have been doing this, it has hardly changed in the last little while, but that's when it's set. And so it would make a difference to people who have, drawing a blank, a variable rate mortgage, as well as lines of credit, that sort of thing. So what the Bank of Canada's overnight lending rate matters to those people, because if the rate is increased, the amount of interest that they pay on their variable rate products will go up. Vice versa, if it goes down, the rates go down. And we've not seen a change for quite some time, and not expecting to see any in 2021. They are talking about increasing in 2022. Mid-2022 is likely when that will happen, and of course the economy as a whole will make a difference in terms of when that happens. So we're still all experiencing, anyone in a variable rate mortgage or with a revolving line of credit are experiencing some pretty cool looking rates right now. That will come to an end eventually. And probably not a rapid increase, but as things start to get better, we will see an increase in the overnight lending rate for sure.
Gotcha. All right. Okay. So what are we talking about today?
Today, we're talking about the pre-approval process, what it is that I do when I'm doing a pre-approval, documents that I ask for, different things as they relate to the pre-approval.
Okay, we're live.
Okay, so I'm ready to go then. All right. Okay. All right. So I'm always going to start with a set of questions that you're required to answer to determine how much money a lender will loan you. An application's taken where you're going to provide information about your income, your assets, credit, and your debt level. Income, we're going to ask for a letter of employment. We're looking for a pay stub for your latest pay period. T4s for the last 2 years. I typically always ask for those along with the letter of employment and pay stub, just because there's different things that we can use or just different numbers that we can use to verify employment. And those documents are going to give me the information it is that I need. Excuse me, T1s might be required in some cases. That's your income tax return. And if you're self-employed, we need financials. Assets, we ask for those because they determine your net worth, and they're going to provide information about the down payment and closing costs, because of course money that you have in bank accounts, RRSPs, I'm getting a little ahead of myself here, and their values, other investment accounts and their values, all that information matters, as does vehicles and their value. So if you have motorcycles, quads, trikes, that type of thing, good for me to know about those things as well. And any property that you own as well, of course. And another thing we look at is credit. And I'm always going to obtain a copy of your credit report. And I do that for several reasons. We want to see what the credit score looks like, any recent inquiries that have been made, balances owing to creditors, your repayment amounts, length of time a credit facility has been opened, repayment history, of course, and any bankruptcies and or consumer proposals and their discharge dates. That information will show on your credit file, as will any collections or judgments and their status. So if there's anything of a derogatory nature on the file, we want to know about it ahead of time. We want to make sure that the credit bureau reflects information as is now. Sometimes it doesn't update that payments have been made, that collections have been paid off, that sort of a thing. So ergo why I pulled the bureau and important for me to take a look at it from the get-go. Ideally, lenders like to see 2 credit facilities with good repayment history for 2 years. Any support payments being made need to be reported as well, because there are debts that we need to include in debt servicing. And if you've ever had issues with credit in the past, always good to tell me about that as well, even if it's something that's 10 years old or maybe even a little bit older, because things tend to show up at the most inopportune times. And if I know about it ahead of time, I'm going to know how to deal with it. So it's always good to share that information with me. I'm not being nosy, and I will ask questions of that nature as well. Not because I'm being nosy, not because I'm going to judge. It's because it's information that I should know ahead of time. We also look at debt level. Having too much debt owing to creditors can have a negative impact on an application. And I'm seeing more and more of that lately where, even though the ratios are in line, if there's a lot of debt, the lenders maybe not so much are not uncomfortable with it, but the insurers are, it seems. So, I know it's easier said than done if you have debt to get it paid down, but if you are in a position to do that, don't do it till you talk to me first, but that might be something that I will talk to you about when I'm doing the pre-approval with you, so that I'm guiding you through and setting you up for success, not failure. And that's it.
Wow, short and sweet. That was awesome. That was so perfect. So if you want to get a hold of Barb and myself, we've made it pretty easy. letstalklending.com is a fantastic place that gets both of us. We're here to support you. Barb is the right first step. Before you step foot in a car, before you step foot in someone's front door that has their home for sale, you need to know your situation. I can't stress that enough. I hate it when I see situations where people fall in love with a house and it's like they haven't even talked to a banker yet. And it's like, it's not fair to sellers, and it's also not fair to yourself. Because it can be stressful, and you need to know exactly what your position is before you go shopping.
That's right. I agree.
Okay, you got a couple other slides there, Barb.
I do.
That's Barb.
And that's Melanie.
That's me on a good hair day. Awesome. Oh my goodness, too fun. Okay, so Barb, the next time that we get to meet is going to be, and I'm just going to have our little ticker here go at the bottom. The next time is September the 8th. And it sounds like we're going to have a little bit more of nothing to tell. But Barb, what I really love is that you provide education so that people can really understand their financial situation and make the right decisions for them when it comes to your money.
That's right.
Right?
Well, that's what I'm here to do.
And so just a quick tidbit about what's happening in the market right now. We've had 4 really strong months of home sales, or property sales in total, in fact. And at the end of June, if we sell 111 more single-family homes, we will beat all of last year. I fully expect that we are going to beat that. Our current inventory for single-family homes is 240. As of 15 minutes ago, 35 houses sold so far already this month. Overall, there's 404 listings in the Fort McMurray market and 50 sales so far. So it's really encouraging to see things are still moving. You got to price your house right, people, and to sellers, when it's priced right, you get an offer within the first 2 weeks. If not, it's going to sit. So come out of the gate strong, right? Definitely. That's my advice. So, Barb, we will get to chat again in September. I hope you get to enjoy this beautiful weather, no masks, and
that's so cool.
They'll be hugging the next time I get to see you. So,
yes. Woohoo.
All righty, Fort McMurray. Tag a friend, share this video, get in contact with us if we can help you. I hope that you're having a great day, and thanks for watching.
Thanks so much.